Today, we will continue our journey, keep scalping and day trading momentum-based assets. We will rely on our best scalping indicator and strategy. Markets are not easy to trade. We need to focus on more and more specific assets. No more user stock, let's start now. Today, let's start with our best trading view indicator and take some extra time to learn all the important tricks behind it. Once again, I am using the ICT High Time Frame Candle indicator for the setup. I need you to carefully focus on the specific area right here, which I call the triple imbalance point. We have imbalances on the 30-minute, 45-minute, and the 1-hour charts. This is exactly how you can quickly spot potential and highly tradable areas in the market. Now let's take a closer look at what actually happens when the price reaches the trade area. Here we have what I like to call the triple concept field. So let me remind you what that means in detail. First, we have the inner support and resistance flip. Second, there is the inner imbalance. And third, we have the inner liquidity area. The powerful combination of these three concepts is my favorite and most reliable field source in 2025 for effective price action trading. Now the question is, how can we actually take a trade here? Does this trade look like a great and possible setup? In my view, yes, absolutely, why not? But then, why is my stop loss placed here specifically? What is the exact reason for that decision? Let's zoom out a bit and get a larger perspective of the overall chart. Notice the small imbalance area right here, which my stop loss is also covering for extra safety. Also, there's a tiny liquidity area in the same region, and it is quite possible that the price might hit this area to seek more fill. Who really knows for sure? As a secondary idea, I could even choose to enlarge my stop loss here, which would turn this into a much longer trade, of course, with a bigger and more ambitious target above. However, if you find yourself getting stopped out very frequently, it is usually a much better idea to have slightly larger stop losses to give the trade more breathing room. So all in all, we spotted a great trade idea and confirmed the presence of strong fill for the move. But we avoid this kind of super micro stop loss based trades, because if you do them, often you will get stopped out far too much. Instead, observe the deeper imbalances and hidden inner liquidity points and try to cover them within your trade plan, ideally aiming for setups with a maximum of 2R for balanced risk and reward. Now let me talk about another trading setup that we can clearly see here. In this particular example, as you can notice, we have two very significant support and resistance flips areas on the chart. At the very top, we can also see the previous week's high, which can be considered as a possible target level. However, it is quite far away from my current position, so it is not concerning me too much at the moment. Still, the overall look of this chart gives me a strong bullish bias in Bitcoin, at least from my perspective. Now, the important question we need to ask is this: where exactly can the price react in these situations? Could it be the PDH Masterclass amplifier area, or perhaps one of the other support and resistance flip lines? When you find yourself over-focused and a bit confused in setups like this, when there are too many possible cases, the best approach is often to use a simple yo-yo-based cost averaging methods. This is a very straightforward idea, where you place multiple limit orders at key and strategic price action points that you believe are important. Now let's imagine for a moment that you ignored the cost averaging plan and decided to use risk to reward system. You might have noticed here there was a market structure break at the PDH bounce, which stands for the previous day high. Along with the imbalance in that area, you decided to take the trade. It was actually a very solid trade setup here, and there was absolutely nothing wrong with the plan itself. The only issue was that this particular single trade ended in a loss, which is simply a natural part of trading game. Then did you notice something else afterwards? We had a secondary market structure break, this time inside the gigantic BBR area, which bounced nicely from the support and resistance flip zone. That was a great observation, and this time the trade actually started to work in our favor. However, why exactly was trade still quite tricky? Let's use our indicator here to carefully observe the area again. Look at this gigantic and massive imbalance zone. It is just huge and very noticeable. When you have such a large imbalance area on the chart, trading actually becomes much more difficult because we have no clear or reliable idea about how deep the pullback might actually be. It becomes very challenging to decide where to place your stop losses in such situations. In setups like this, the safest approach is to lower your overall risk and focus on minimizing any possible losses that you might face. Okay folks, ending this great lecture. Learned about great trading concepts today. Please take care and see you in the next video. Completed the free trading course but still need more? My master classes teach liquidity, imbalance, and the market structure in detail. Combine them with forward and reverse trading using momentum superboxes and yo-yo cost average entry models. After that, you will master scalping with a one-screen free trading view indicator, a revolutionary trading system. Finally, you will learn to invest your profits using my 10-year swing investing with working agent system. Interested? Please see the video description.